Today we're focusing on one of the most important companies in the global economy, the Taiwan Semiconductor Manufacturing Company, also known as TSMC. Now, TSMC sits right at the heart of the artificial intelligence and digital economy megatrend that we've been experiencing. Every AI model, cloud server, advanced chip, from NVIDIA's H100S to Apple's iPhones, it relies on TSMC's foundries to really bring that silicon to life. So this company here produces over 90% of the world's most advanced semiconductors, arguably making it the most critical link in the global tech supply chain. But the question is, has TSMC already peaked after a huge post-AI rally? If you just take a look here, you can see really surging higher, making fresh highs even as I'm making this video. Or is this still the early stage of a long-term growth cycle in semiconductor demand that's only expected to increase? So let's look now at the seasonality. Now, seasonally, when we look at TSMC's seasonal performance over the past 10 years, there is sort of a clear pattern that emerges. What we see that between sort of April and late July, there's this period of strength. You can see an average return of 16.13% over the last 10 years, when the stock has just historically shown the best average returns. And this strength often coincides with two key drivers. There's rising demand ahead of new chip launches, and product cycles from major clients like Apple and NVIDIA help this. There's also sort of seasonal optimism generally around global tech markets as earning expectations sort of can pick up into mid-year. But in contrast for TSMC, look at the August through to October period. Tends to be a period of consolidation. See, the average return is 1.31% over the last years, and that sort of consolidation is often helped by end-of-year inventory restocking, and optimism around the following year's chip cycle comes in sort of towards the end of the year, and you see this average return can sort of pick up into year end. So from a seasonal perspective, TSMC's sweet spot lies in the second quarter and the early summer. Now, if we look at the corresponding index, if we look at the Taiwan Stock Exchange Index, the TAIEX or the MSCI Taiwan, this is the index for the Taiwanese country, of which TSMC is a major part of it. Right, when TSMC does well, it tends to pull the whole index higher, and when chip demand sort of softens, the whole market tends to feel it as well. So, you can see here that the TSMC dominates this index. It's around 30% of this index is made up by TSMC. And, it shows a very similar rhythm to the stock itself. Look, that sort of late April, late July, early August period, average return of 4.29%. But that August to October is a period of weakness, and tend to see an average return of negative 3.33%. So the broader index shows a very similar rhythm to TSMC. That just reinforces the idea that TSMC rallies, when this company rallies, it lifts the whole index. And TSMC's performance is both a reflection and a driver of Taiwanese market sentiment, essentially. And so when TSMC does well, it tends to pull the index higher, and when chip demand softens, the whole market feels it. So that just shows you the incredible influence of this one stock. Now, if we also look at the S&P 500 Information Technology Index and the Semiconductor Index here, the SOX. Now, this is very interesting because the Philadelphia Semiconductor Index, the SOX, both tend to perform strongly April into July. Do you see? Average return 12.28%, and then weekly from that August to October before a pickup at the end of the year. So very similar again to TSMC. The sector cools off in the middle of the year and then picks up strength towards the end of the year. And if we look at the technology select sector SPDR fund XLK, which is basically the ETF for the technology sector of the S&P 500, we actually see a very similar pattern. Late April into early July, period of strength, average return over 10%, consolidation in the summer, and then a pickup into year-end, average return 4.22%. So it's really interesting here. So TSMC is an incredibly powerful, yet it's a complicated position, because on the one hand, TSMC is the global leader in advanced chip fabrication with clients like Apple, NVIDIA, AMD, Qualcomm, and demand for high-end chips remain robust. It's driven by AI data centers, autonomous vehicles, advanced computing. And in its latest earnings, TSMC reported double-digit growth, right, in AI-related orders. And it does expect AI chip demand to increase. But there are challenges. Geopolitical risk. The company operates in Taiwan. That's a geopolitical flashpoint between the US and China, a key uncertainty as well for investors. There's also cyclical pressures. The chip sector remains insensitive to global inventory cycles, and TSMC has warned previously of uneven demand in smartphones and consumer electronics. It's also very capital intense, the AI whole mega trend. Annual capital expenditure exceeding 30 billion just means that margins remain under extreme pressure. And the competition, Samsung, Intel, they're trying to catch up technologically, and the US Chips Act is also encouraging local fabrication of chips. So that does potentially reshape the competitive landscape. Still, TSMC's technologies lead remains unmatched, and it continues to anchor the global semiconductor supply chain and the AI boom itself. So you can see seasonality shows that both the stock and the Taiwanese index tends to be strongest in spring to early summer. Average return 16.20% from 29th of April to 27th of July. We see this period of consolidation around the summer, and then a pickup into year end. So this leaves us with the open question, doesn't it? Has TSMC already priced in the AI revolution? Or are we still in this early innings of a structural uptrend in global chip demand? Now, nobody can predict the future, but combining the seasonal evidence, the macro context, and fundamental analysis can really give traders and investors a clearer data-driven edge, especially in turbulent global markets. Remember, don't just trade it, Seasonax it.